Got your
Welcome,
book, babe?
welcome. And
Yes, I do, Laura.
glad to have everybody here. Welcome if you're new. Glad to have you if you're new. If you don't know me, I'm Delvin. That's my first name. That's my last name, Delvin. So welcome. Glad to have you. I'm gonna turn it over to Barbara, and we will get this call started.
Thank you, Mr. Wright, for that. I'm just going to read the Futures and Commodities Trading Group disclaimer. I'm having a little technical issue. It reads, trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means that you alone are responsible for your actions in any trading or investing activities. Back to you.
Awesome. Thank you. Before we get into our normal routine of going over our quizzes, I'm gonna make sure I don't forget this time to go back to Barbara in case she want to say anything. Uh, I'm gonna be on point today. Back to you, Barbara.
Thank you, Mr. Wright. I also want to ask Dr. Melba, would you like to say something about the retreat? If not, I'll go ahead and say. So everyone, in April, this April, we have such an exciting retreat planned for you guys. It starts April the 11th through April the 14th. Every day, you're going to get powerful information as to how you can start one of the most amazing businesses you will ever have, and that's trading futures and commodities. You want to be here during this retreat. There's going to be special strategies and things that's going to be given to you that you have yet to learn and probably have never heard about, but you're going to hear about it during these 4 days at the retreat. So we want you there. We have great things planned for you, great activities, and so much power packed information. I promise you, you will come with such expectations, and we seek to exceed your expectations. So we just want you to know that we want you in the place for 4 days to learn how you can trade futures and commodities. We're so excited. So we look forward to seeing you there.
Awesome. Thanks,
Um,
Barbara.
sorry, Delvin and Miss Barbara, before we continue, can I just say something?
Yes.
Miss Barbara, I don't know how many one-on-one spaces you have left, but I just wanted to stress to everybody how important these one-on-one sessions really are. It can elevate your trading experience and how you trade in a way that it's very hard to do unless you have trading partners in your life, just like Miss Barbara, Miss Thora, and Dr. Melba are. I feel like the information that you're given, the nuances, and what you're taught based on the 25 to 35 years of experience that Delvin has and what he imparts to you and how he teaches you extra things that you just can't get from these courses. I feel like on this course, no question is ever a stupid question, but people find it difficult to express themselves. They may need clarity by asking the same question time and time again, which they don't feel able to do to get that full understanding in these sessions. So I just wanted to stress how important the one-on-one sessions will be and how it will improve and enhance and take your trading experience way forward than you can ever imagine doing it just by watching the volumes time and time again. The information that you get and the nuanced information that you get can totally change and enhance your trading experience. So yeah, if there are any spaces still left, I would advise that you book them up as soon as possible. Thank you. That's all.
Oh man, thank you, V. That's very, very important. We appreciate that because those one-on-one, like you said, it gives you time to focus on what that person is needing and wanting, without any interruptions or distractions, and makes them more comfortable to talk about whatever it is that they need to talk about and go over. And that's important. So I appreciate you saying that, V. Uh, Barbara, we got some quizzes. You and Dr. Melvin, either one of y'all able to grab those?
You have it, Dr. Melba?
I sure do. I'll grab them.
Thank you.
So we had 2 quizzes, correct?
Yes.
Mm-hmm. And the first one was Woohoo. There we go. When placing a trade, if you buy a futures contract and your order is filled at the current price, what type of order is it?
Market.
A, limit order. B, order in the court. C, stop loss. D, to go order. E, market order. F, all of the above. G, none of the above. When placing a trade, if you buy a futures contract and your order is filled at the current price, what type of order is it?
I
heard some-
absolutely love what I did. I think Shaw was ready to answer this question before you finished, Dr. Melvin.
You know,
So-
I'm so sorry. I'm so embarrassed because I'm like, oh my
No.
gosh, you didn't read the answers yet. I truly apologize for that.
That's okay. That's okay. I love it.
I
Yeah,
like
so
it.
come on, tell us what you think. You sound like
I
you
said,
ready.
come on, Shaw.
I was ready. Yes, I was
Bring it, girl. Bring it.
because I remember like my first round in this class, and I probably got like 30% of the answers correct, and I was so embarrassed. So this is my 3rd time, and I'm like so excited that I'm learning more, committing more, and it's super exciting. So when I know something, hey, I want to share it.
Hey,
Very good.
great.
Very good.
I want you to, Dr. Mel. Do we want her to be embarrassed?
Absolutely not.
No.
We want her to be empowered.
Yes, thank you. I appreciate it.
Yes. Yeah. Don't ever feel that way because we here to learn. And what do I say every time I make a post? This is how we learn.
Yep.
Yeah. So don't feel that way. We here to learn, and we gonna learn together. We don't want to leave anybody behind. So that's the way we want to move forward.
I was going to say the
Right.
right answer wasn't on there. It's called a filled order. I'm teasing. I'm teasing. You're right.
Oh, I almost passed out. I'm like, wait, what?
Yeah, it's called a filled market order. Yeah.
Oh, a field market.
Could
Okay, a
be.
field market. Right, but I knew it was if it was at that price, I knew it was something to do with the market. So I'm like, okay, if we're getting at the current price, that's the current market price. So I just wanted to be certain that that's all. So is that correct, though, market?
That's
Absolutely.
correct.
Okay, super. Thank you.
My sense of humor got away from me. I'm sorry.
Excellent. Excellent, Mr. Johnny. All right. And our second quiz question, as I scroll, there we are. When you place a limit order, you can make it a day order or a GTC order or good till cancel order. A, false. B, true. C, never.
That is true. B.
Say it again, Jamal. What is it?
That is true, sir. B.
That is true. B. Excellent. Excellent. Y'all just don't know. It's really refreshing seeing y'all get these quizzes right. Coming in the room, answering the quizzes. So great job. Great job. Um, most important thing is to know that, just take the quiz and that's how you learn. Not really about whether you get it right or wrong. Just take the quiz. The more you take it, it makes you think about it, and then that's how you learn. So I appreciate y'all doing that. Uh, before we get started, I just wanted to say also that we've arrived at lesson 5. I think that's where we at now, and I just you know I got a phone call that gave me a great idea that we just needed to do a quick recap of what we have went through so far before we get into lesson 5, and I think that's a good idea because what we covered so far, I want to make sure everybody's up to speed and just a recap, real brief recap. I think that would be good for everybody. So lesson 1 was where we focus on our rules, right? We go over the rules and we know there's 20 rules that we try to focus on, make sure we understand rules that we need to follow. And out of those 20 rules, we have one that we call our golden rule. And we know there's more than 20 rules, but we took the top 20 that we felt was most important, and we went over those rules. And that's how we start our course out with the lessons, always at going over the rules. And lesson 2 is where we got into learning the language that we need to learn. There's different language that we're going to learn when it comes to trading that we might not be familiar with. And we heard some of the stuff before, but we want to make sure we understand it. And, we all may have heard, bull and bear. And we got into talking about what that meant. Bull means that the market's going up, and bear means that the market's going down. And we also know that we can take positions in the market. And when we take our position in the market, we can be long the market. That means that we bullish the market. We can be short the market. That means that we bearish the market. We went over talking about the importance of what role we play when we get into the market as traders. When we enter into the market, we have a role that's pretty important and well appreciated when it comes to the market. We bring something to the market called liquidity, and that's something that's important because we want to have that when we get in the market. Liquidity means that we are bringing cash flow. We're bringing the opportunity to be able to enter trades and exit trades, just like that, and that's important. The more traders means more liquidity, and the most out of the categories that we have in the market, the most popular or the most common is the small speculators, which that's the role we play in the market. And we also talked about the fact that when it comes to the markets that we trade, there's 2 types of traders, and that's something that we learn what kind of trader we are over time. But there's a fundamental trader, and then there's a technical trader, and then we also can be both a fundamental and a technical trader. And then we moved on into talking about the lesson 3, where we got into talking about a contract, futures contract. What is a futures contract? And we talked about the definition of what a futures contract was. And we even looked at the contract specifications of what a futures contract is. And we also, what we should have talked about, I apologize that we didn't cover, is when it comes to markets that we can trade, financial markets that we trade, we hear that some of these markets are regulated and some not. I want to pause right here for a second and ask the question. Those that have been around for a while, you know the answer to this question. But if you're just coming into the group and you're new, you may or may not know. But I want to ask, can someone tell me is the futures market regulated? Anyone can tell me whether or not this market is regulated?
Yes, it is.
Say it again?
Yes, yes, it is. It is regulated.
Yes, it is.
Yes, it
Yeah,
is.
it is. Okay, great. I agree with you. It is. It is one of those markets that is regulated. Not only is it regulated, it's highly regulated. Anyone know the organization that regulates it? Were
Would
you
that
speaking?
happen?
Okay.
Would that happen to be the CME Commodities Mercantile Exchange?
Say it again, Jamal?
Would that happen to be the CME Commodities Mercantile Exchange?
No, that's the exchange where, matter of fact, that's the largest commodity exchange in the world, but not who regulates the market. But that's a great answer. That is the largest commodity exchange. But the organization that regulates it is the CFTC. And who can tell me what the CFTC stands for?
Char's got it in the
Okay, come on, Shaw.
It is the Commodities Future Trading Commission.
Exactly. Great. And I think that's .gov or the .org with CFTC stands for Commodity Futures Trading Commission. And that's who regulates this industry. And it's important to know that, because if you want to know anything about the futures market, that's where you want to go. And they got everything on their site. It's a little overwhelming, there's so much information, but that's who regulates it. And it's highly regulated. And we didn't cover that, but I wanted to make sure we go back and talk about that, because you need to know that you're trading in a regulated space, and a very highly regulated space. So keep that in mind. Johnny B, is there anything we covered in the 4 lessons that I didn't mention? I'm sure it is. I'm trying to remember everything we talked about between 1, 2, 3, and 4.
let's see, we did terms, we did rules, terms. In the terms, we talked really about the movie. No, I think we pretty much got it.
We talked about orders. That's what I didn't mention, right? We
Right,
talked about
orders. Yeah, that's what we were talking about a minute ago. Types of orders.
Yeah, we have the market order. And
Well, the
limit
other
order,
thing that
right?
we talked about was the type of trader, or excuse me, what category of traders we were, whether we were producers, commercial, little speculator or big speculator. We talked about that.
Right.
So, yeah.
And on those orders, just to clarify, we have a market order and we have what's called a limit order. And when we place a limit order, we can clarify and be specific when we put that order in. Do we want that order to be a day order, meaning that it's just working for that day only? When that trading session ends, that order is canceled if it's not filled. And we can have what's called a good to cancel order, which is also referred to as GTC. That good to cancel order means that order will be working until it's either filled or canceled. And most platforms allow a good to cancel order to work for 90 days before they cancel it. So what we talked about when it came to orders.
Well, Delvin, the other thing is that we talked about that it's kind of hard to say that we talked about it specifically, because we're going to cover it again. When we went over to the rules, there's a lot of topics under the rules that we talked about, and we're going to cover them again, whether it be stop loss, whether it be making a plan, or, limiting your risk. So all those things that we talked about in the rules, we're going to cover again as we get in as we go forward.
Yes, yeah, absolutely, multiple times, multiple times. So as we get into lesson 5, we do a lot of looking at charts because that's where our decisions are made. That's where we make a decision when it comes to our trading, by looking at the charts. And charts are very, very interesting because they tell a story. And once you learn how to read them, you can see that they're telling, quite a bit of stories on just one chart. I mean, charts are really speaking and telling a story. And when it comes to watching the charts, there's a few different charts that we can take a look at. And we want to look at some charts, Barbara, and go to bar chart if you don't mind. And let's look at some charts and talk about something that we look for and watch for on the chart.
Yeah. Hey, forgive me.
50% retracement.
Yeah.
Huh?
Forgive me. I'm getting a little old here. So, I don't remember how many times we've covered contract specifications, but that's I think we did cover contract specifications as well. So, and that's something we got to know as we go into the system.
Absolutely. Yes,
Where would you
that's
like to
very
go?
important. We have to know the contract specifications. So, Barbara, if you could tell us where you go, what site to go to, and where to go, and let's look at let's look at the cocoa or natural gas. I'll let you pick cocoa, natural gas, or cotton chart. But walk us through how to get there. What's the first thing we need to do?
So you're going to Google barchart.com, and when you do, you're going to come on its home page. Your focus is going to be futures. So you're going to click this tab right here, and you double click it. It will take you to the futures major markets overview page. And you just click full list, and it's going to show you all of the different commodity groupings for futures. And we're looking at natural gas, or you said, which one you say, natural gas? Or
Cotton or cocoa? I'm gonna let you pick one.
or cocoa. All right, we'll go to cocoa. So cocoa happens to be a soft, one of the softs. And you just scroll down and it's going to show you all of the commodities for the groupings of softs. And we'll just choose cocoa right here, May 24. And when you do, it's going to take you to its future prices page, where it'll show you all of the different months that you can trade for this particular commodity. So one thing you want to notice is the open interest. So that's why we're going to go to May, because it has more open interest than March, because March probably soon going to expire. So this is your contract specifications page, your price overview. Is there anything you want to go over on this page before I go to the chart?
Well, since you mentioned, before you make the chart big, but since you mentioned open interest, to make sure we know what that is, Johnny B, you want to tell us what is he talking about when she say open interest?
Well, it's a number of contracts that are actually being traded, but let's scroll down just a little bit. When we talk about contract specifications, go ahead and scroll back up just for a second. Okay, right here it tells you your previous close volume, open interest so there's 107,775 contracts that have been traded that are actually on the books for this month, right? The stochastics, the weighted alpha, 5-day change, and the 52-week change. That's the number of points that it's gone up or in those or down in those timeframes. Okay, so then we would go down a little bit further. This is going to give an overview of what cocoa's doing, recent news, and scroll down to our contract. So our contract specifications, you know, it says the commodity is cocoa, that the contract size is 10 metric tons or 22,046 pounds. So the tick size is $1 per metric ton, right? And or $10 per contract. Trading hours, exchange, ICE, I believe, is International Commodity Exchange. Point value, each time it moves a point, it's $10. Okay. I wonder why that is. Can somebody tell me why the point value is 10 if the tick size is $1?
I did that.
Is
Johnny.
that because the contract is $10 per contract?
No. One more guess. Why is the point value 10 if the tick size is $1? It's pretty simple.
And tons per contract.
The contract equals 10 metric tons. So 10 times $1 is 10. That was pretty easy, wasn't it? Sorry, I didn't mean to. All right. So the next is the margin and the maintenance. Margin is 4,785. That's how much you have to have in your account before you can commit to the trade. And then you have to maintain 4,350 in your account to keep from a margin call. The first notice, we talked about this last week. How will I know, you know, when this contract's getting close so I don't have to take delivery? Well, your first notice is 66 days out from here. And your expiration date is 87 days or the 15th of May. All right. Now, the seasonal chart is always kind of like this chart. It lets us know what the price difference is from last year at this same time. And you'll notice that the difference in cocoa, see, last year was pretty flat. This year it took off. Now, based on this chart, you would think, oop, it's losing its momentum and the price is turned back. All right. Scroll down a little bit more, please. All right. We talked about commercials. Okay. The people that commercially buy the cocoa, they've got 85,415 contracts long. All right. And they've got 140,000 contracts short. And the difference from last week is the numbers in red. If it was in green, that means the price would have gone up. Or, I'm sorry, the number of contracts would have gone up. But the people that have liquidated their position, you'll notice a bunch of contracts got liquidated. The producers or the people that grow and sell the cocoa, this is how many contracts they have. And the difference from the week ago. Managed money, right? Managed money would be the large speculators, the non-commercial shorts, or the long commercials, or the short, the little guy. Okay. Swap dealers and other reportables. So this lets us know how many contracts there are and what positions they're in. Okay. I think I'll hold off on saying something about that. Why is it all in red right now? But unless you want to say something, the price has changed, right? So either, people are, coming out of the market, getting rid of their contracts, and for several reasons, could be forced out, a short squeeze, or in this case, prices at a high, people are coming out. All right, scroll down. And this is your price performance over the last month, 3 months, 52 weeks. All right. So these are the things you kind of look at. You can scroll up a little bit to the contract specs. Yeah, if you see more, this gives you more information. All right, gives you the symbol, the exchange, a lot of the other stuff, the months it's traded, the hours, and the limit moves. Scroll down a little bit. Or your daily, so you're there. Notice on this contract, there is no daily limit. See, it says daily limit, none. Okay. And again, there's a description of the commodity. Scroll on down, I don't. So, all of that's just your description, pretty much, I think. Okay.
Right, man. Thank you, Johnny.
Back to you, sir.
Appreciate that. And we want to now we want to look at the chart for cocoa. And when we go to the chart, there's different charts we can look at. We have what's called a daily chart, a weekly chart, a monthly chart, and a yearly chart. And you can find those at the top of the chart, or if you see Barbara's cursor, and you'll see mostly that when we go to look at the charts, you'll see us going to the 6-month chart for the most part. And the difference between these daily, weekly, monthly, and yearly charts is the information that's on the chart. The more time on the chart, the more data, the more time you have, the more history, the more information that the chart is showing and sharing and telling you. We look at the monthly chart for the most part because of the time frame. Gives us enough time frame to see what's going on, whatever commodity we're looking at. So you will see us go to the 6-month chart sometime. And most of the time, let me say it that way. And then sometimes we may look at a 1-year chart or a 3-month chart, but I mainly look at the 6-month chart because of the time frame. It has just amount enough time that I want to see when I'm looking at a chart to see what's going on, whatever commodity I'm looking at. Then I might go to other charts from there because each one of them is going to tell a different story. But on the 6-month chart is why I mainly do and work from on the 6-month chart. Dr. Melville, when we looking at charts, what's called a 50% retracement? How is important is that? Can you tell us how important a 50% retracement is, Dr. Melville?
Yes,
Is she-
the 50% retracement is very important. Yeah, that sounds,
Yeah.
it pretty much tells us, it gives us a guesstimate, because not all the time it goes to the 50% retracement. So it's a guesstimate of where the market is going to retrace to. And so sometimes it goes all the way to the 50% retracement at the 6-month level. And sometimes it does not. It may go as far as the 3-month, and then it turns around and goes back in the direction it was going in. So you really have to spend the time looking at your charts, looking at your trend lines to make sure, and you'll learn this as we go along, that the trend line's not broken and things like that, so that you know which direction you're trading in.
So a 50% retracement means what? That the market will retrace back 50% of the move that it just made on the chart, correct?
Correct.
And when we go to the chart and we're trying to determine what's a 50% retracement, Dr. Melville, what's the formula that we need to know and learn in order to do that? Can you tell me that?
Yes, we sure can. So when you look at your chart, there's a half moon at the highest point on the chart, and there's a half moon on the lowest point on your chart. And you have to choose which chart system you're in, whether you're 1 month, 3 months, 6 month. Our mentors teach us to stick to the 6-month when we first start trading. And so we go to the 6-month chart, and you look at those half moons at the bottom and the top of the chart, the highest and the lowest part of the chart. You're going to take those numbers that are equivalent to the highest on the chart and the lowest on the chart. You're going to add those numbers together, and you're going to divide by 2. And that's going to give you a 50% retracement. So that number that you get, when you add those numbers together and divide them by 2, then you mark your 50% and with a trend line, a horizontal trend line. And that's how you know where the market should retrace to.
So can we do the 50% retracement on this chart? Okay, can I ask you, Barbara? Barbara, do you mind if we if we logged out of your account so we can look at the chart from a fresh chart perspective? Is that okay? Thank you. So, Dr. Melville, you're saying that we need to take the highest price
Correct.
that's on that chart and
Yeah,
the lowest price.
Correct. I'll let her get back to a chart for us. Awesome. Good job, Barbara. Thank you. Okay. So and this is a cocoa chart?
Yes.
Yes.
This is May Cocoa.
May cocoa, okay. So does everyone see that half moon on the top right there where it said, what number is that, Barbara? 5786?
Yes.
Yeah. So if everyone has a calculator, put 5786 in your calculator, and let's go to the bottom of the chart now, where the half moon is at the very bottom.
I'm sorry, what are you referring to when you say the half moon?
Okay.
Sorry.
So you see, go to the top of the chart, Barbara. Okay, top. You see that little, it looks like a C on the top, like a little cap on the top of that green bar.
Okay, thank you.
That's what I'm calling a half moon. So when you go to your charts, every chart you go to, whether it's 1 month, 3 months, 6 months, 1 year, 5 year, 20 year max, you're going to see a half moon at the top. And then when you go to scroll down to the bottom, Barbara, you'll see a half moon on the bottom as well.
Thank you.
And where's the half moon for the bottom? Is that where your cursor is, Barbara?
Yes.
Okay, and what number is that? Don't move it. I'll scroll over. It's 3372. So we're gonna add 3372 to the original number that I gave you, which I think was 5786. And you're gonna divide by 2. Does someone have a calculation for that?
4579 is the 50% retracement.
4579. Thank you, Monique. Barbara, can you mark that 4579 in purple?
Yes.
So we're actually looking for the market to go from where it is right now down to 45.79 for its 50% retracement on the 6-month chart. And every chart is different. So just because it's a 6-month retracement on the 6-month chart, if you go to the 1-year or 3-month chart, it may not be the same. And in some charts, the 3, the 6, and the 1 year, they're all the same. So you have to do it for each chart. Yeah, so that you can see the story. And so a lot of times there's a progression of the story. And you'll see like the 50% for like, say, the 1 month, it'll be where Barbara's cursor is right now, 5422. Then the 3 month will be down at 5,000. And then the 6 month will be at 45.79. Sometimes you see that, and sometimes you see all of them are the same. And so you can't guess. You have to actually do the calculation for each one, depending on what story you're trying to look at on which charting system, whether it's 1 month, 3 months, 6 month, 1 year.
And Dr. Melville, do you see these market these charts retrace back 50%?
Majority of the times they do. Just about every time they retrace to the 6 month 50%. And then some of them get extreme and they go to the 1 year 50%. But for the most part, every time they go to that 6 month 50% retracement. Very rare does it stop at 3 month and turn around and do something different. My friend OJ does weird things like that.
Can I mention something real quick here as well?
Yes.
We're gonna talk quite a bit about support and resistance. And if you'll notice, what do you see right at that 45.79 level?
A strong support.
Yeah. That up and down movement right there indicates that it went up, hit resistance, and came back down and hit support before it took off to the top. All right. So that would indicate that would be support. So if the next move, okay, so we're going to talk about 1, 2, 3 tops formations. So if that's in true, a 1, 2, 3 top, and which indicated a change in direction, now, our target, if we're dealing with options or even if we're not, one of our targets might be support at the 50% retracement. So that's how far, that would be our goal of how far we would ride that trade. Back to
Excellent. Now, Barbara, let's look at another chart and see, can we show another example of doing a 50% retracement. How about either the cotton or the natural gas? So when we looking at these charts, every time you look at a chart, you see a different story. Like Dr. Miller was saying, you got the 1 month, 3 months, 6 months, but every one of them had a different story. And they, like I said, they speak to you. If you don't know how to read them, don't feel no way because you're gonna learn how to read it. But I think we lost Barbara's screen share. So I think she was on the natural gas or the cotton chart, but I want to go over another example
Gas.
for
Can you
looking
see
at a
it?
50% retracement.
Are you able
Okay,
to see it?
and Dr. Miller, if you don't mind, give us another example how we do this 1, 2, 3. You did a great job.
Yeah,
I mean, not the 1, 3, but the 50% retracement.
yeah. This way it's going from the opposite direction. We remember what one of our rules, play the market both directions. Right.
Yes.
Exactly. Yeah. With this one, the last one, we were in an uptrend. This one, we're in a downtrend. And so we're looking at a 50% retracement in the opposite direction. So Barbara, can you put your cursor down at the bottom where it says 1600? Okay, so can you put in your calculator 1.634? And let's move over. That's the lowest point on the chart where there's a half moon, and the highest point on the chart where there's a half moon is 3.321. So I need someone to add those together and divide by 2. What number do we get? Thanks, Shar. 2.4775, Barbara. 2.4775. There we go. So give us 2.478. Okay. So at this point, this is where you're looking for this chart to retrace to. It's 50% retracement. And we're in the 6-month chart.
Yes.
Excellent. Okay.
Can I ask a favor?
Yes. you can.
Can you that let's see if I can get a annotator. Can you give me a reading here, please? All right, Shard, 2.113. And what was our high number? $3.316. If we can add those two together. And divide that by 2.
$2.7145.
Can you give me a reading right here, please?
2.7145.
Look at there. When this was the bottom, that first little red tick, right? We would have got,
Leave that open.
okay. We would have got a 1, right? Excuse me, a 1, 2, 3 bottom. It retraced 50%, changed directions, and took off. You will see this repeat itself over and over and over again. Let me see if I can figure out how to clear my marks.
Yeah, the market gives you plenty of opportunities to get in and get out over and over again. It's not just one time.
Excellent, excellent. That 50% retracement is something that we use real consistently. I think it's something that we can pick up pretty easily, get the understanding of how to do the formula, and go to the charts and just practice it. Doing that 50% retracement is something that you'll see we use a lot when it comes to the charts. So that's our first introduction on the charts. We're gonna go and get into a lot more, like you heard Johnny B talked about support resistance. There's some formations that we watch for. We're gonna cover those and get into those in detail. But the 50% retracement is something that we also look for and we use a lot. So thank you, Dr. Melva. Thank you,
Can I say
Barbara.
something real quick?
Please.
Yeah. So I challenged the class this week until our next session to go on barchart.com and open up a personal account with your own username and password so that every time you mark up a chart, all your markings will stay. When you open up your account, your 50% retracement that you've marked on there, it'll be there every time you open it up, your account. And I challenge everyone to find 5 different charts this week and just trace through your 50% retracement on each one of those 6-month charts, just to get yourself acclimated to doing 50% retracements on a 6-month chart.
Yes.
So, for those of you that want to take the challenge, go for it.
Excellent challenge. Excellent. We want to look at charts as much as we can, even if it's 5-10 minutes a day. You want to get your chart time in and get it in. And most important, understand we're treating this like a business. So give your business at least 10-15 minutes a day. Take that challenge. That's a great challenge. The more you look at the charts, the more you'll start to understand it. And the more you look at the charts, the more you'll be able to see the stories that they're telling. And then you'll see that these charts are actually speaking to you. And you'll be able to read them with no problem. The more you do it, the more you understand it. So thank you again, Dr. Melva. Thank you, Barbara. Mr. Johnny B. And we want to ask and open up if there's any questions or comments of what we talked about and went over. We would love to hear the questions and the comments right now.
Okay. Hi, how are you? This is Kelly Petrus. Hi, everyone.
Hey.
Thank you for this. So one thing that Dr. Melva was saying, and I think it's important for us to know, and we are getting the terminology, like you said, in lesson 2, we started getting some terminology, but when we just heard about half moons, which is really the indication of where it's peaked on those lines on the charts. I think that, I guess I would like to have, exactly what these terms mean or what they are, because we didn't talk about half moons from what my recollection. So when the young lady asked, well, what do you mean by half moon? I think a lot of us were wondering what was meant by that as well. So I think that as we go along, there's going to be more terminology, I presume, that we'll hear that we'll need clarity on.
Okay, great point. Great point. I want to make sure we talk about that. Matter of fact, know that the charts have a highest price and a lowest price on them. And actually, to be honest with you, the half moon is just what we refer to it as. It's not really like an industry term, but it's us pointing out that there's a shortcut. The chart really is guiding you and pointing you to the highest price and the lowest price if you look for those little arches on the chart that we call half moons, but you can call it what you want to. But if you want to just ignore those, you can still find the highest price and the lowest price on the chart just by using, just your naked eye. But that's just an indication that the chart is telling you here's the highest price and here's the lowest price on the chart. And that's just what we choose to call it, but that's not really an industry term to we just recognize that that's on the chart and then we use that to help identify it. Dr. Miller, were you trying to say something? I'm sorry.
Yeah, I was saying the same thing. It's not an industry term. It's just what it looks like to the naked eye. If it looks like an arc to you, you can call it an arc. Whatever it looks like to you, just as long as you can recognize that symbol on the highest point of the chart and lowest point of the chart so that you can do your calculation of your 50% retracement. That's all we want you to recognize. So that it's not an industry term like contract specifications page like that. It's just, it looks like a half moon, it looks like an arc. So we use terms like that that will catch your eye to recognize it as quickly as possible when you're going through your charts. But that was
Okay.
that was really good for us to understand that that's an area that where we could lose the class when we use terms like that are not
Right.
industry standards. But thank you for your input.
Delvin, Delvin,
Yes.
if I could say something.
Yeah. Hey,
This is
Lana.
Lana. Hi. I don't know how many times I've gone through your class. Many times, since I started. And every time I listen, I learn something more. And this is the first time that I think in all the times I've been through your class that I've heard this. So God bless y'all. You're still continuing to bring new things into us and help those of us that have been on before, as well.
Hey, I still learn too. So
Yeah, it's awesome. Thank you, girls and Delvin, for bringing more new information, new ways to do things and to help us all.
yes. I appreciate you, Lana.
Oh, I love you too. You
Yeah.
guys are really doing something great for us here.
The girls are amazing, right?
Well,
Super
thank you.
duper.
Thank you.
Thank you.
I
He's
guess I'm
laughing,
included
girl.
with the girls.
And you too, Mr. Johnny.
Great question though, Kelly. I appreciate that because that's just how we look at it and call it. But yeah, we don't want you to be lost or have some be saying something that make people kind of confused. So appreciate you pointing that out so we could explain it.
The other
Any
thing
more
we haven't
any
talked
more
about,
questions?
the other
Well,
thing
I had
we-
my hand raised. I had my hand raised.
yeah,
If
the other
I
thing
Okay,
that we
so-
haven't really talked about in the charts is really the candles, and we'll talk about those probably another time.
Yeah.
But go
Zoe
ahead.
has a question.
May I? Yeah, I know what I found very valuable, and I would like to be able to go into a little bit further, maybe more examples. At this sort of like what the appetite for understanding open interest. The explanation of that was very valuable. That in terms of looking at the number of contracts actually being traded. So we showed one example, and we'd like to be able to look at more. But the other thing that I also would like to be able to learn more about is the requirement of having an X amount of dollars in the account. So I saw that in Coco, you needed 4,000 some dollars, I believe. So the explanation of, do you have to have it all in once, or do how does that work? Would be helpful to understand once we start trading.
Okay. So let's use the cocoa for an example. Okay. So we saw the margin was like 4,700 or something, right?
Yeah. Yes.
If you wanted to trade a cocoa contract, that's what you will have to have in your account in order to be able to control one cocoa contract, no matter which month it is, May, July, etc. Remember when we went over the contract specifications, the margin and the maintenance, right? So that's what that's referring to. That margin, I always tell people when you're thinking of margin, substitute that word for deposit. Think of it as a deposit. That's what you need to be able to get into that contract. That word maintenance is what you need to have maintained in your account while you're controlling that contract. So whatever that amount is, your account needs to maintain that balance while you're in that trade, controlling that contract. That's why I tell you to substitute the word maintenance for balance. So while you have that cocoa trade that you put up $4,700 to get into it, your account needs to maintain whatever the maintenance is while you're in that trade. It'll need to go below that amount while you're in that trade. Now, $4,700, what you have to control the contract, Zoe, but that's not what you have to risk once you get in the trade. They say you're only risking $400 on the trade. That
Right.
means you're just risking 400 out of that 4,700. You just needed 4,700 to get into the trade. But now you determine what you're going to risk on the trade. Whether you're going by support and resistance, or you're going by the 10% rule, our golden rule. But you're in control of what you're going to risk of the 4,700. But you need that amount to control the contract, to buy the contract. With me so far?
Yes, yes. You said a contract. So that means, let's say if I wanted 2 contracts, I would have to have double the amount?
Correct.
Okay.
Correct.
Okay.
And we're going to
So
talk about something that's called internal financing also, okay?
Okay.
And when we get into that, that's going to be explaining how we can use our profits while we're in the trade to acquire additional contracts without having to come out of pocket to get a second contract. We can use our profits that allow us to control another contract.
Okay,
Okay,
great.
that's
Super.
what we're going to talk
Thank
about.
you. Okay, perfect. Thank you. No, I found this very valuable. Thank you. And I also like the idea of that always looking at starting with the 6-month, sort of like setting that ourselves as a parameter for starting to look at that first before, you could always look at a year on or 3 months and so, but always start with the 6-month. So to set ourselves as a rule for our internal rule or self-rule. Thank you.
Yeah, I found the 6-month chart as one that gives you just enough history and data on the chart that you can work with on a 6-month chart. I got a question for you though, while we asking questions.
Yes.
Do you look at videos all day?
All day? No, I allow myself in the mornings first. You're funny.
Oh, I gotta tell
No,
y'all,
no.
man. I know y'all hear me saying it, but Barbara, you can attest to this. There's not a day going by that she's not commenting on them YouTube videos and watching the videos and commenting on the videos, and then she comments on the clarity she got from this one. Now I understand this better. This one helped me with. I'm like, man, does she watch videos all day?
No, I create a habit and make sure that every day create six important areas for my goals. And watching the options and learning options is an important goal. So I make that a habit every morning to make sure I watch something in the videos. Yes, it's part of my training. And so
You've been going back to some old videos too. I see it. Great
Thank
job,
you.
though. Great.
Thank you.
I love it.
Yeah,
I love how you
good
taking
job,
it serious.
Zoe. Because
Yeah.
the old videos, Zoe, they have so much nuggets in those old videos. So you're doing, because I did the same when I first started, I did the same thing. I lived in those old videos and you learn
like
so much. I mean, the nuggets in those old videos, but you gotta search through them to find the
Yes.
nuggets. But when you do, you write it down in your notebook and you'll never forget it.
This is my notebook. I don't know if you can see it. I don't know. No, I can't see it on the
Yes,
camera.
no, I believe it. I have one too.
I
I
can't
have
see
one.
it. It's a very thick
If you
notebook. Yeah, this is
if
my
you watch those
notebook.
old videos too, you'll notice that in those old videos, you may hear that one of my goals is I want to go to Disney World.
Oh,
I've been
gosh.
wanting to go to Disney World for a long time. I want to meet Goofy, but you'll notice you might hear in some of those old videos how bad I want to go to Disney World. So
Okay, pay attention to, no, that's definitely, I wake up first thing in the, this is my get to do this XYZ. So I do, definitely, it's part of that. You have to be hungry and you have to want to create a change. That's, for me, I have to be hungry to be able to do this. So I am.
You keep it up, cause you're doing great.
Thank you. Thank you.
Any more questions or comments? Well, I think we covered everything.
I wanted to ask, I wrote down the challenge, wanted to make sure I understood. She says to open a bar chart account and open 5 different accounts? No, that wasn't.
No, I
Just
want you,
open up
no, the
account.
challenge was to do 5 50% retracements. So you pick 5 different commodities, say coffee, feeder cattle, live cattle, hogs, you know, whatever ones you want, 5 different commodities, and do the 50% retracement on the 6-month chart.
Okay. It's gonna be interesting. I love it.
Have fun.
All right.
Oh,
Give you something to do, Ray.
yeah, since I don't have my calls 3 times a day no more.
Uh-oh.
But I love this. I'm
I
but
do
I'm
too. Yes.
yeah, I'm thinking about Johnny every time I'm trying to go with this. I don't have nobody telling me